Holy cow, guys. Bitcoin just tanked earlier today on the news that Iran sent drones over and it basically attacked Israel. I'm sure you saw that the whole market, whole crypto market tanked. But what does that mean for the price of Bitcoin? What's it gonna do? If we go to war, is Bitcoin just gonna fall to $10,000? Well, let's take a look at the chart. Let me share my screen here with you guys. And let's look at it. Yeah, so I think this is right about the time we're on the 2 hour chart here. This is right about the time the news broke, right around 10 a.m. Central Time, or I guess that's noon Eastern. And look, it just tanked. What do we get there? We got a retracement there of 10%. Wow, that's a lot. What's that on the market cap? I'm curious now. BTC market cap. Maybe we have to go to all market cap. There it is. That got us what we were at before the news. We were at 1.3 trillion and after 1.2 trillion. Wow. We wiped out like $100 billion. 100 billion. That's a lot. That's a lot of market cap. Um, so yeah, but what does this mean for the price of Bitcoin? I mean, if you look back at past conflicts, past wars, the markets, we can go off of stock markets because we don't have really a lot to go off of as far as modern attacks and modern wars in the West. There's just not much there. But if you look back at Pearl Harbor, I think I saw a tweet where they said talking about how Pearl Harbor's initially stocks tanked, but over the next couple days, stocks did recover. So is that what we should expect with Bitcoin? I would say the war factor probably won't continue to be as big of a concern, but I still think there's still weakness in risk on assets. And at the end of the day, I mean, Bitcoin's it is a risk on asset, right? When there's liquidity in the market. I mean, really the way I look at Bitcoin is it's a measure of liquidity in the market. Like how much money's floating around there that people can use to go make investments with. And so I think the bigger concern about Bitcoin right now is and another risk on assets. We kind of the reason we're seeing a correction in stocks is, you know, the market isn't so sure that interest rates are gonna get dropped this year. Now, I mean, it's my opinion that we could still see 3 rate drops this year, but after those hot CPI reports, it's looking less likely. A lot of the predictive bond markets have started to push those rate cuts out towards the end of the year, and, even a couple after the election, and higher rates like sucks out liquidity from the market. So I think risk on assets like Bitcoin has been kind of pricing in these rate drops, and we got way up here, and all of a sudden, people started to question whether we're going to get those rate cuts this summer, and started to sell. So right now we're down what 16%, 17% from the peak. This is a 1, 2, 3, 4, 5, 4.5, 5 week dip we've got here, correction, which isn't completely uncommon. If we look at if we go, let's go back and look at the previous bull runs and kind of measure how long the corrections are over there. So the last bull run, when we pushed up to the second top here, we had a 1, 2, 3, 3 to 4 week correction, and then the push up before that was count this one because you see we got that long wick, so at least half a week, um, 2, 3, 4, about 3.5, 4 week correction there, and then we've got another one, another small one down here. So these corrections aren't out of the ordinary for market corrections. I think they're a Much fewer rate concerns back here. Much fewer like Fed concerns. Let's go back one more to 2018. See if we got any. No, we got one. We got two. Look at that. We got two corrections here. We got 1, 2, 3, 4, 5 week correction there. We got a 2 week correction here. Those red bars, and we've got like about a week correction right there. So yeah, these corrections aren't uncommon in bull cycles, and they can be steep. I think if you look, let's go to the daily chart here. Let's look at like how big these corrections were. Went the wrong way there. This is 23. Let's find one of these and kind of measure. So yeah, this is the one in 2021 on the way up to that first peak. So it cooperates with me here. There we go. So this correction was 30%. 30% correction in Bitcoin. Last bull cycle. So yeah, not to be unexpected. I think nothing this last drop doesn't kind of change where we are in the market. I think it's doesn't change the direction. Looks like we're in a bull cycle, and no data there to kind of to say that we're not. So, maybe if we see a fully engulfing candle here, that could be of a concern. But let's look at the fibbies. Let's look at the fibbies. That'll give us an idea of kind of where we might go next. It looks like we could still push down further, or we could always correct up. The news with interest rates and everything, and the S&P kind of still showing a bit of softness. The broader market showing softness makes me think that we could still continue to uh, see this correction last a little longer. So look at that. Oh, look at that. Bounced right off the $63,000 Fibby there. And then the next one we get down to is around 60,000. So heard a couple targets down in that area, 59, 58-ish. So we'll see what happens over the next couple days here. But nothing changes the bull thesis from a data point of view. But I'll let you know if anything changes. So thanks for watching. Check out my videos. I'm trying to post as many videos as I can about small caps in the crypto market. Just really doing deep analysis and deep research, because no one does that like unbiased. They give a couple facts, but they don't really look at how a project in this bull cycle could be successful, because this cycle's different, totally different than other cycles. It's going to be based more on fundamentals and like businesses actually having a product. You're not going to be able to be successful on roadmaps and hopium as much this cycle as you were in the past. So take a look at them. Hope you like them, and thanks for watching.